Hey guys, thanks for coming. I'm Nick, and this is Real Life Money, where we talk about topics that schools do not. So let's get started. In this video, we're going over the stock market for beginners. So we'll be going into more of what the stock market is, really the pure basics of it, looking at some pros and cons, and at the end, if it matters, I'll give you my opinion. Just so you guys know, I do have a couple other videos talking about the stock market, so I'll leave that in the description below. So let's get into it. Now, since you're new to the stock market, you probably have basic questions asking what the stock market is. What's it about? Some questions like, is it only for rich people? Do you have to be smarter than Einstein? You have to be good at math? Calculus? You have to find X? Do you need days, maybe even years of research and time to put into it? Is it risky? And is it like gambling? Can I lose all my money? Well, here's the thing. Many of these things can be considered myths because of the people that tell us this. Well, most of the time these people are broke and uneducated about the market, saying that they lost all their money in it and they hit all-time lows, when in the meantime the market is hitting all-time highs. I say, why listen to these people, because they obviously didn't make money in the market, so you can create wealth using the stock market, just like they taught you in school. Oh wait, they didn't teach that! So we're going to be looking at the overall market. We're not going to be going into individual stocks. It's not going to be complicated. We're going to keep it easy. We're not going too deep. So we're going to be looking at the Dow Jones and S&P 500. Now what these are, they're called indexes. They basically mirror what the market is doing. If people say the market is up, they're probably referring to either the Dow Jones or S&P 500. Now Dow Jones, or just Dow, is 30 of the largest companies in America. The S&P 500 is 500 of the largest companies in America. Obviously, more wider spread because there's 500 compared to 30. Now these are large companies that probably are not going out of business anytime soon. These are huge companies that you're probably wearing right now. You're probably driving, you're eating it, you're using products from these companies. Some companies that are included in these indexes could be like Apple. We all have their phones. McDonald's. We all eat there, even if it tastes like shit. ExxonMobil, the oil company. You need gas for your car. Or even Disney to take little Timmy and Jennifer to the park. So the thing is, with these companies, for you to lose all of your money, these companies would have to go bankrupt. $0 a share. Is that possible? Of course, anything's possible, but for these companies, highly unlikely. As a side note, yes, of course it has ups and downs. It might go down lower than you expect, and it could also go higher than you expect. The overall trend and history shows that it's going up over time. Because with more time, businesses grow, the stock market goes up. It basically mirrors the economy, the American economy. It's pretty strong so far. So many uneducated people focus on crashes like the Great Recession in 2008. Yes, it is a fact that you could have lost 50% of your money. Yes, that is half of your money. Bear with me. However, if you understand the market, when it does drop, understand, and history shows this, that it rebounds, which means it stabilizes back to the price that it was originally before the crash. So if you stayed with it, yes, you did lose money, but then it rebounded. So in the end, you didn't lose anything, and it continued going higher from there. Now again, history shows this. The average return of the market, of course it depends where you look, who you listen to, but the average is between 7 to 10% per year, sometimes even higher. Now, even if we're taking the more conservative return of 7%, that still kicks savings account interest rates ass. What are you getting? 0.1%? Maybe even as high as 0.5%. Now, there are a lot of factors affecting the market, such as the news. If bad news comes out, either world news, what's going on with our country, if bad news comes out, stocks go down. If good news comes out, they go up. Another example could be earnings. When companies are posting profits, how much money they made, and if they beat analysts' expectations, stocks could go up. If they don't, they go down. If a lawsuit happens, if the company does something unethical or illegal, or if the CEO shows his butt to his secretary, stock drops. If diseases are going around, illnesses, a zombie outbreak happens, and a huge one is politics. The main man right now is President Trump. Whether you agree with him or not, the market is up since his election. Now, a quick tip that where I get my personal news and information about the stock market or individual stocks even, I personally use Yahoo Finance. It shows on the top, you could see the Dow Jones, S&P 500, if they're up or down, and you could also search for individual stocks. If you want to look up Apple, type in Apple, their stock price comes up, you see some news articles about them, and you can check out their information. Now, just a quick reminder, if you are interested about the stock market, I do have other videos and will continue to have other videos about it, and I'll leave some links in the description for you guys. So now let's go into pros and cons of the stock market. Let's start out with the stock market is risky. Yes, we did see the crash in 2008, the Great Recession. Stocks plummeted 50%, and yes, stocks go up and down every single second of every single day. But if you have time on your side, then you can create wealth from the stock market. I would say maybe if you have 3+ years that you want to put money in somewhere to get money back, I would say the stock market is a good place. I say kind of 3+ years or at least 2 years. But I say that because if the market crashes, yeah, that's a bad thing. Depending who you ask, I would say that's a great buying opportunity. But yes, if something crashes, you need time for that to rebound. So with time, it will stabilize, you'll make your money back, and it'll continue to go up. So that's all you really need is if you have time, then it's not as risky as you think. Here's the thing, bad news gets thrown around all the time. And majority of those news stories or whatever's going on, people overreact. Either it drops way too low or it goes way too high and eventually stabilizes. Now when it's making its way back up, it could be your way to wealth. Here's the thing, if you invest every single month or even every year for a long amount of time, even your whole life, and you continue that habit, that's such a great habit because that creates wealth. When you keep putting money into it, you're gaining more. And then your returns or interest gets more interest, so then it builds faster. That's how you grow wealth. Now, another thing is, to ease your mind, is that it can be simple. So here's the thing. There are things called index funds, guys. These funds mirror the index, whether it's the Dow Jones or S&P 500 like we talked about before. They choose the same companies, the same large companies with that are more conservative, lower risk because they're so large. They take those and put them in the funds. So if the market goes up, then your fund goes up as well. Warren Buffett, one of the richest people in the world, actually suggests index funds. They usually outperform other people's funds that are trying to beat the market. If you follow the market, you'll do fine. Warren Buffett is a billionaire, and he actually placed a bet that a simple index fund, just mirroring the market like an S&P 500 fund, 500 of the largest companies in America, if it just matches the market, he says, or he betted that that will beat a fancy hedge fund. A hedge fund is where like millionaires put their money. And so far, he's winning that bet with the index fund. So now I'm going to throw in a little con for you. The stock market can be scary. You really don't know what's going on. You can lose money. If you look at your account and like a crash happens, you could lose thousands of dollars. But if you play it smart and safe and stay with it, a pro to the stock market is that it is very exciting. You can make money and grow wealth like this. Now the cool thing is that anyone could really do it, guys. You don't have to be rich either. You don't have to be some super smart person. You don't have to be good at math, really, if you just get into it. That's the hardest part, is just getting into it for the long term so you could create that wealth. You know, just like how school taught you. Oh wait, they still didn't teach you that stuff. Interesting. Well, luckily I do here, guys. At Real Life Money, we go over these types of topics, real life and money, because school doesn't. So relating to this topic, I would suggest, if you have a long-term plan and want to grow wealth, the stock market is a great thing to get into. So if this helped open your mind a bit, helped you out, learned something small that, school simply didn't teach you, like and subscribe. I go over these types of videos just because, unfortunately, personal finance, we got to deal with it. So thanks for watching, guys, and I'll see you in the next one.